brief intro. I think a simple agenda, we intro you into the community, into our speaker's profile today. Um, then we have a 30-minute deck where Ankur shares his journey. I think it's going to be a simple deck, but he has some interesting points to share with you guys. Followed by audience Q&A. We have a bunch of questions from the community already. So I'll share the Slido link in the chat section in case you guys have any more questions to add in there. Tons of experience that we can learn from. So without further ado, let's get started. So brief intro, I think for folks who've joined in new, the Product Folks is a volunteer-driven community. We've been active for the last 1.5 years now. This is primarily comprised of product managers, product marketers, product designers, and enthusiasts. Bunch of initiatives, Learn PM with me, which is a free online resource for people who want to upskill into the field. We have Insurger.club, which is an early stage APM program. Recently launched something called GrabChai.online, as well as the 100 PMs initiative. That is to connect more folks in the ecosystem. So lots more things coming up. In case you want to get involved, feel free to DM us. Today we have with us Ankur Joshi, who is the founder of Nuclei. I think for folks who haven't stalked him already on LinkedIn, he's had a very interesting journey so far. I think he'll be sharing more about his intro, couple of founder journeys he's been building, and one interesting point that we just discussed right before this call, where he's probably going to be covering it also on the last slide, is around how to think about a team as a product. I think that is something that I'm really looking forward to as well. So without further ado, Ankur, over to you. I'll probably see you again later.
Hey, thanks, man. Thanks for having me today on this webinar podcast. It's good to be here. Hi, guys. I'm Ankur Joshi. I'm the founder and CEO of Nuclei. We are a Bangalore-based company, and we are currently building a API platform, or rather a product platform, mainly from a bank's perspective. So I'll walk you through some of the slides and some of the things which we essentially thought about while building Nuclei. So I'll walk you through why we essentially started with banks as our customers, why we even came up with this idea of building this platform with banks, and how we have graduated or kind of matured over the last couple of years. We started in September 2018. That was when we started thinking about, after having built say 2 or 3 companies, a couple of exits, we started thinking what next to do and what problems could we solve. So we went around speaking to a lot of telcos. We went around speaking to a lot of insurance companies. We went around speaking to a lot of banks across markets, not just India, but also Middle East and Southeast Asia, because of their geographical proximity. One of the principle which we wanted to leverage, or guiding principles which we wanted to leverage for Nuclei, was to think about actually build a sustainable business, build a profitable business from the get-go. And therefore, we were looking for clients who could fund our growth, who could fund our sustenance. That's why we went after telcos, insurance, and banks. Speaking to them, understanding their problems led us to focus only on banks and not telcos or insurance, because telcos in 2018 were struggling a lot. So not the good time from a market perspective to go after and build with them, because they couldn't pay us upfront money. Insurance from a digitalization perspective was still a couple of years or 3 years behind banks, and therefore we just focused on banks. So those 2 sectors are not outside of our purview. Like, we are going back to telcos again, specifically in the Middle East market. But banks, essentially, we started focusing on banks in 2018. And started interacting with a lot of senior folks across 4 or 5 or 6 banks in India, trying to understand what is it that they would want, and also trying to negotiate or argue with them what is it that they would need. And that's when we figured that we need to build products with Indian banks or with banks, instead of building a product, going to them and pitching to them. The moment you start building with them, you don't have to go through a sales cycle, because essentially the product is sold already. And that's what we did with the first 3 or 4 banks, to be honest. Once our product was already with them, their skin was already in the game. They were already bought into the overall platform which we were building, or overall product which we were building. selling to them or integrating with those particular banks was a very easy thing to do. It was not that difficult. And the moment we had three banks, go live with our product, signing the next incremental banks became all the more easier. Now, obviously, the question was that how did we go about, how did we go about, having this conversation with the banks where they started trusting us that we could build that product. That was the difficult part where, you had to, and it took us nearly 6 months to reach to that stage with three banks and probably converse with around 30, 40, 50 banks across markets, where out of those 40, 50 banks, three were ready to take a punt on us and were ready to invest money into us. The good part with signing a contract with most of the banks is that they pay you upfront money, or you can negotiate commercials where you get upfront money, which helps you with your sustenance. So you don't necessarily have to raise funds for your sustenance. So you get upfront money, plus we have built a platform where as the transactions scale, our income from that platform also increases. So from day one, we have built a profitable business, and that's how we want to remain, run the company as well. We want to remain profitable. So primary objective of this slide is that, we wanted to build with the banks along with them so that the skin was in the game. They had bought into the product. Sales cycle reduces and it becomes easier to sell to other banks as well. Social proof comes into the picture. The other thing which we wanted to leverage was that instead of building a B2C platform where we will have to spend millions of dollars to get distribution for our own app or our own product, we wanted to leverage an existing distribution. Therefore, we went after telcos, insurance, and banks. And it's not necessarily the digital distribution which they had. It's also the organic or the physical distribution which they have, right? So the product may not necessarily over a period of time just remain digital, but it could turn into what people call a phygital, right? So it could be the branches which help us distribute the product. It will always be the mobile or the web platforms of the bank or various other digital assets which will help leverage our product and reach out to customers, whether the customer is a retail customer or in future it could also be a commercial or a SME customer, right? So that's when we decided that instead of building our own distribution, specifically on the digital front, why not leverage an existing distribution? And yes, of course, we'll have to pay for that distribution somehow, right? But at the end of the day, we don't dilute our stake. We don't have to give out equity. So retain certain amount of independence, slightly more independence. And at the same time, you get distribution in steps. So the moment you sign a new bank, your distribution is there. So you don't have to spend on digital marketing as much, but you just have to sign each and every bank. So your sales cycle also pushes you into your distribution. And then you can build products on their bank's platform, right? So you have one product. Once you have integrated your product with the bank, adding a new product becomes all the more easier. Now, the other thing which we realize that banks carry a lot of trust with them today, whether it is because of the name bank, whether it is because the customer sees banks branches near their houses, or whether it is they know that the government of India or RBI will not let them fail. So there is a lot of trust between the banks. Now, trust again is a commodity. It could be bought over a period of time, and that's what all the consumer tech companies are doing. This was the lever which really worked for us because the banks started feeling that threat from the consumer tech companies and wanted to become more like them. And therefore, they wanted to leverage or engage with the customers, not just on the banking products, but also on the non-banking products. That's where our platform came into the picture, that we would help them go live with any non-banking product, any non-banking services. We'll integrate those APIs, create the front-end experience, and let the bank go to market for their customer base as soon as possible. The customer, on the other hand, trusts the bank to do the right thing. So whether it is a banking product or a non-banking product, so their trust already comes into the picture, and they would, and again, see, like India is not a single persona. It is probably more than 50 different personas. So we are not essentially building for a individual persona who would go and trust an individual app which does a single thing for them. We are also building for various variety of other personas who would, instead of going to, say, a consumer tech company, would rather go to their bank for certain transactions because they trust them more. So we are building for that particular persona. And that's what we wanted to leverage. And then we wanted to build a platform for the banks. So now that our platform is integrated, now that our product is integrated with the bank, we become the go-to person or the go-to company or for the banks to integrate any new product. So now instead of, and this is where the threshold comes in, this is where our business's mode comes in, right? So when a bank wants to integrate any new product, they know that for them, the go-to market, if they have to build on their own, will be much longer than just asking us to build it. And for us, it is beautiful. Why? Because we integrate a particular product and then distribute across multiple banks. So we are not building just for one bank, but for multiple banks. So the cost of ownership for the bank for that particular service or product also reduces. The go-to market also reduces, and it doesn't really matter if it's being distributed across banks. Why? Because every bank will have their own constituency. So we become a platform for the banks to integrate new products, integrate new services, and then essentially engage with their customers more deeply. From the Nuclei's perspective or from our company's perspective, we were also very sure that we have to build a business. We are not trying to build a startup to flip. We wanted to build a business, and a business cannot be built in say 2 or 3 years. It has to be built over 7, 8, 10 good years. And that's why we were very, very focused of building a sustainable business from day one. Therefore, the choice of going with the banks. Therefore, the choice of negotiating commercials where we're getting upfront payment. Therefore, the choice of signing Indian banks first, becoming sustainable in Indian market first, and then going outside. This also requires us to be very, very frugal and requires us to stay lean, specifically during good times and also during bad times like right now, correct? So we were very keen on making sure that we are not expending a lot of money. We are not spending to gain any vanity metrics. We are only and only focused on making sure that the profitability of the company is there. And that's what we want to continue focusing on. So for us, the metric is not the GMV. For us, the metric is not the top line. The only metric which we focus from a finance perspective is the bottom line, profitability, and like long-term free cash flow as well. While building the product, while building the company, we were also very clear about thinking long-term. Now, one of the mistakes which we have done in the past or previous companies is that there was a lot of focus on vanity metrics. There was a lot of focus on growing 10x every year or every 18 months. And that also comes with the funding rounds, etc., because you have to raise every 18 months. So you were more focused on gaining or achieving short-term goals rather than focusing on long-term goals. That necessarily pulls you away from thinking about profitability to thinking about your top line or your GMV. And therefore, it's very difficult during those times to think long-term across various parameters. So while building Nuclei, while starting Nuclei, we were very sure that whatever decisions we take have to necessarily be long-term. Now, we have not been successful 100% of the time, but again, we have to try, right? So most of the times we have been successful, whether it is thinking long-term while building a product, or thinking long-term while even hiring a person for the team. So even the team which we are building, we have to think long-term. We have to believe when we are bringing a person in that this person is going to work with us for the next 3 to 5 years at least, and not solve a short-term problem by bringing in a person who has the right skill set, but not the right attitude. So we would always prefer the attitude over skill set. Why? Because the skill set can be built over 3 months or 6 months, given the right attitude. So we have always focused on that. Similarly, we have also focused on clients who we know or we believe will be with us in the long term. So this plays into our thinking about that. Even if we have to go the extra mile for our clients, we would do that. Why? Because we believe that whenever we make mistakes, I know for sure that most of our clients have been forgiving whenever we have made mistakes, because that's how long-term relationships are built, right? You let go of few things, you get few things in return. And that's how we want to build a company as well, that we don't want to work with clients who think of us or who see us as a short-term solution. We want to build product with them. We want to build a platform for them. And therefore, we will think like that in the long run as well. While building the product, obviously, previous companies, one of the biggest problems which we had was that our product was targeting to reduce clients' cost. And Therefore, it becomes very, very difficult to go and sell to them. On the other hand, if your product targets or helps the client grow their market share or grow their revenue, it becomes very, very easy to sell. And that's also what helped us in getting buy-in from the initial few banks. Why? Because we are helping them, increase their revenue or increase their engagement. Revenue could be a second order consequence as well. Increase their engagement with their customer base. So we have been very focused on not building any product which will help save costs for the client, but building all the products which will help increase their revenue. So that helps reduce your sales cycle. That helps you gain more leverage with your clients. That helps you gain more trust with the client very, very fast and reduce the sales cycle overall. Okay. Um, and finally, the last slide which I wanted to speak about was that for us, while building Nuclei, our primary product is our team. And I think of building the team also as building the product, because that's how you will build the company. That's how you will even build the product for your clients. So if you get the right team, your product will be taken care of, your clients will be taken care of, and your stakeholders will be taken care of. So instead of thinking about all the second order consequences, the cause or the primary motivation for getting the product right or the clients right or the stakeholders right or doing the right things for those three constituents is to make sure that the team is right. And that's what we are primarily focused on, to get the team right, because everything else will follow after that. Okay. uh, Guys, I only had that much to share. Wanted to keep it more interactive in nature, so left more time from a Q&A perspective, and we can go from there. Does that make sense?
Awesome, awesome. Yes, thank you so much, Ankur. I think that was a great primer, and we are getting a lot more questions on the chat section as well as the Slido link. So let me do one thing. I was also going through the questions. I bucketed them into a couple of themes. So we have another 30-40 minutes. Let's see how much of that we can cover. Jumping right in, guys, I've shared the Slido link on the chat section. So in case you guys could just click that and also help me upvote, that would help pick the most popular ones that you guys are also interested in listening to, as well as I can see some more questions coming in on the chat section. If you guys could please add that to Slido so we have everything there. So yeah, thanks once again for the deck, Ankur. I think that was great and excited to see what you guys are building.
Thank you.
Jumping right in. The first theme that we're seeing is around pricing and paying propensity for a certain sector, which is today, like a lot of people are referring to this section as the new Bharat, that, a lot of people who were unbanked coming into the digital ecosystem. So how do you see products that are being built in this space? So how is the paying propensity? Any insights into that? We are seeing products that are being built across the sector, where there is credit building for the top percentage of that layer, while there are others who are focusing on the people who are the tier 2, tier 3, tier 4, which are just entering this finance ecosystem, the banking ecosystem. So what are your thoughts on new companies coming into this space? How does the paying propensity look like? How does the business model and monetization look like? What are your thoughts?
So I read a blog. I think someone from Bloom Ventures wrote that blog about dividing India into three or four, or India's customers or residents into three or four categories.
Right.
One being very, very premium, second then sub premium, and so on and so forth.
Right.
Now, and obviously the volume also increases as you go down. Now, if you're building for the very, very premium products, people who have credit cards and people with say credit score of more than 750 or so, which as you mentioned, credit is building for. Obviously, your volume will be lower, but your what should you say, CLTV, customer lifetime value, will be higher. You just have to figure out a way to make sure that the customer is very, very loyal to you and doesn't go away, because the number of customers you're targeting is very small. Similarly, if you're building for the larger base, your CLTV will be smaller, and therefore it is going to be a volume game. To be honest, we are essentially in that band right now, where we are not targeting the most premium customers through the platform. We are targeting the next set of bunch. These customers, it's not that they don't have money, and obviously your CLTV won't be very, very high, like not the super premium customers, but these customers are also aspirational. And this could be, the middle class in urban cities or the tier 2, tier 3 cities. These customers are aspirational in nature, and they are ready to spend more. Specifically, the new generation, talk about someone between 25 and 40 years old, right? And they have money to spend as well, because
Right.
they are the mindset of, say, a 40 plus year old, given the culture, was to save a lot of money.
Right.
And nowadays, if you look at all the 20-year-olds, they would not save money, right? They wouldn't have money to spend by the end of the month. They will just spend on most of the money, most of their income becomes their discretionary income or disposable income.
Right.
So that is pushing into the GDP as well, and that's where their aspirational nature comes into picture. That's where they want to spend more as well. So we are targeting essentially them. Obviously, more volume is required because the margin you make per customer is lower, and therefore we have to distribute across multiple banks rather than just focus on one or two banks. So that's why we are
Okay.
right now integrating with 14 banks in India,
Okay.
and we want to
Okay.
grow it to 20 odd banks in the next 8-9 months.
Got it. Since you're building not a direct B2C app or a product, you're building a B2B2C. So, what are some risks or challenges that you've seen working? I'm pretty sure everyone's spoken about how banks have this, legacy systems in place. I'm pretty sure building out that product is not technically easy. But what are some other challenges or risks that you see in the entire space that you're building in?
So obviously distribution is not owned by us. That's one of the biggest risk. So we had to diversify that risk, and therefore add more banks. So that's how that gets diversified. The second is the complete or the core technology, the app which gets delivered to the customer is again not owned by us. So we own a portion of it. So we kind of went around it by also building the front end customer experience for the bank. So our product does not only provide the backend but also the front end customer experience. So that way
Got it.
we go around, even if the core bank's banking functionality, the experience is not that great. When they come onto our section, the experience is at par with the consumer tech companies. So we went, kind of went around that problem to solve it. Obviously, if you're running or your own app, you can say deploy every 15 days. Uh,
Mhm.
but there are a lot of security constraints from a bank's perspective, and they can't afford to deploy every 15 days or every month. So the cycle at which we have to deploy new features or new products also becomes a quarterly cycle rather than a fortnightly cycle. So if
Right.
you want to release any new feature, it's a good 3-4 months cycle across all the banks instead of releasing very very fast. So that cycle also reduces, but uh, that will not matter over a 7 year or 8 year period. So
Mhm.
that's also, like, if you look at it from a long term horizon perspective, it's okay. Like, it's something which you'll have to swallow because you're also not spending a lot of money to get
Mhm.
that distribution. So you're leveraging the bank's distribution, and it's fine because the customers who are accessing the bank's app are also not going away. They are fine
Right.
getting an update every 3 months. They don't necessarily look for new features every 15 days, compared to, say, a B2C app where customers
Mhm.
are always coming back to check whether there is a new feature, or even the apps are also trying to bring in customers, reduce their CAC, and engage with them more deeply by bringing new features. So that's how, like, these are the risks which primarily we are seeing.
Fair point. I think, yeah, that's a great point. Um, Another question is, um, this is an interesting question. I think I was actually moving on to the next theme, but Sandeep just added another question here. He asks, what are things that convince bank that they should give money to you to build with you? How easy was this convincing process? If you could just walk us through, think of us as one of the old age banks, and if you were, it's just
So
just for us to understand.
yeah, so it was not easy. It
Yeah.
took us good 6 to 8 months to convince banks,
Hmm.
and plus it was. You're right. Like, there are a lot of banks. They have legacy. There are a lot of bankers uh, for whom it is difficult to think from that perspective. Why? Because obviously there is a habit which is there. There are processes which are there which they have to go through multiple hoops, and for all good reason, all good measure as well, right? So we had to figure out our champions who take a punt on us. And therefore, it was not that whichever bank we approached, we got a champion in every bank who was ready to pay us money. No. We had to approach around 40, 50 banks to get those 3 or 4 banks or 3 or 4 bankers who were ready to back us, who trusted us. And that trust was also not built over 2 or 3 meetings. Right? It was built over, say, 30, 40, 50 meetings. and over 6, 8, 9 months. So it was not easy to do that, and there were a lot of rejections. And it is very similar to fundraise. Like you have to approach 50 odd VCs for one to say yes. And
Mhm.
uh, the saying goes, right? It's okay to hear 99 no's. You are just looking for one yes, and that's what
Right.
we were also targeting there. We're not looking
Right.
for the no's. We're looking for those 2 or 3 yeses, which will get us the funds in, which will help us grow our product, or go live with our product. And then signing the next few banks becomes easier, right? Because the moment they see that 3 banks are using your product, signing the next bank becomes easier. And as and when you grow, social proof comes into picture, and all those things help you
Okay.
leverage the sales cycle.
Agreed.
It was not easy. Trust me, it was not.
Yeah, fair point. Fair point. For all of us product folks, what is one sales tip that you can give us for, say, our first five customers? Say, like, if this was one of your first 3 or 5 banks when you were approaching, uh, how do you go about? You mentioned relationships as one keyword. It builds over time. But how do you start? How do you know who's the right person to approach? How do you find that person? How do you go about the first 1 or 2 meetings? I mean, not directly pitching or helping understand problem. So anything. Most of us here are on the tech and product ecosystem or on the growth side. So anything that you could share with us there to
So
help us.
yeah, it's a very good question. Probably like I can speak about the learnings from sales for hours. Trust me, I can.
Okay.
Like I've written down a sales SOP, all the stories of what we went through. But 2 or 3 things which I always say that a no is not never. It's just not now. So even if a bank says no to you, it's not that they don't want to do it ever. It's just that right now they have different priorities. So don't
Right.
get disheartened from that. Just continue going back to them, and not just banks, like any client for that matter, or any relationship for that matter, right? Uh, as long as whatever you are offering is going to add value, if not today, maybe tomorrow, or maybe 3 months down the line, just continue to be in touch. It will eventually turn out. So one of the banks which we signed in February this year, and thankfully we signed just before the lockdown, we had been approaching them for 18 months, and it was only in February that we were able to convert them. So for nearly a year, they continued to say no, 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 no. We realized after a year, and which was very foolish of us, we realized after a year that they had other priorities during that time. Uh, and once those things got done, then they focused on us, and the deal got done fairly quickly. The second thing, which is applicable for any big organization, is to create options, create as many options as possible for yourself. Don't just go after, say, a rather a chief digital officer, or a head of like IT, or just create. So we have like 16 different posts in a bank who we approach initially. So for example, if we have to approach an Indonesian bank today, there
Yeah.
is a list of 15 or 16 people we would approach. And the
Okay.
objective is that within 3 months, we need to at least have good meetings with 5 or 6 of them. Eventually, make 3 or 4 of them our champions in 6 months, and 8 or 9 months is where the deal will convert. So create as many options as possible, and then believe in randomness. So when the dots will eventually connect, and it won't be the same dots for each and every client, it will be different dots for each and every organization or clients. But it will only be in hindsight that you will be able to connect those dots and figure out that this is what worked for this client, and this is what worked for the other client. So create as many options as possible. Just don't give up. Like perseverance is key.
Got it. Thanks so much for sharing. On the product side of things, very early stage, adding on to another question that we have in chat, did you go about building the product first, like a very simple MVP that you could show as a proof of concept to the bank, or did you go about finding that one partner with a pitch deck or a PPT, selling it to them, and then building that POC with them? What is your approach in this particular case?
Um, Mix of both.
Okay.
Mix of both. So we build a particular use case, not
Hmm.
multiple use cases, a particular use case, and then the rest of the use cases are what we discuss with the
With the
banker,
bank.
that which are the use cases which they would want us to develop, and
Got
then
it.
build on that. So like there's a uh, like a selfish motive also behind that, because
Hmm.
we want them to build with us.
Right.
So the moment we build 5 use cases and go to them, it's essentially us selling to them that you
Right.
should take these 5 use cases. This will be useful for them. The moment we
Right.
go with one use case, which we
Hmm.
know of or have a hunch that will be useful, and then ask them that which are the next 4 use cases out of these 10 which you would want us to build. The moment they give us their 4 use cases, like the deal is more or less done, right? So that's how we build it, Max.
Got it. Got it. Thanks for sharing that. Moving on to another theme, I think a couple of questions around design and UX for this particular while building financial apps for Bharat. So, any particular insights that you have around designing products for Bharat, especially given a lot of these users are probably using are probably smartphone first. They probably haven't used a laptop or a computer earlier. So, interesting insights on those, or how important is the UI compared to we hear so many examples of IRCTC where there's one entire sector. I think it's all the urban who criticize, but at the same time it's one of the most transacted platforms today in India. So what are your thoughts around this in the financial ecosystem?
IRCTC is an exception also because it's a monopoly. So
Right.
like, you just cannot do without it, right? So you
Right.
have to go and go through the process to book a ticket. But otherwise, I think like everyone is looking for a seamless experience. But at the same time, they're also uh, looking for someone or platform which they can trust, and that is
Mhm.
very important. Like there are a lot of neo banks or consumer tech companies who have kind of shifted to banks, etc. Their experience is far better than the traditional bank apps. But have how many of us, for that matter, have shifted all our money to those banks? And the
Yeah, that's true.
question, I'm sure the question is that not many, and probably if at all one amongst the
Hmm.
people who are there, right? So the reason being that it's about trust. You don't trust, like till the time you don't trust them completely with your money, you'll always hesitate to shift or do more financial transaction with them. The moment you have a bank where and the trust could come from anywhere, whether the branch or RBI or the government of India, or just the name bank, it's easier to keep your money there. So even if the customer experience is not as great, what you're looking for is not like the most seamless customer experience. What you're looking is for to make sure that whatever you're promising, you're delivering, and the trust is maintained. So one of the things which I also learned from Nubank in Brazil, uh,
Hmm.
like they took a took few choices or made certain decisions around the tech stack which they were using, which was not the greatest available tech stack which they could build, right? But then the reason they took a decision was to because they were competing with other banks, and even if they're not, like the reason was that they were not trying to build an Instagram, they were not trying to build a Snapchat or Snap. What they were building was a bank, and it's okay to slightly have not as great a customer experience as possible. But at the end of the day, whatever you are delivering, there should not be any glitches in there. So it should be a perfect product.
Got it. Got it. Yeah, I think a couple of more design questions trickling in, but we'll probably try picking that again towards the end. I'd like to move on to the next theme that we have. I think these are a couple of more general themes about your journey so far. You spoke about how you thought of going profitable from day one while building this company versus the others that you've been involved in. Can you share any insights around people who are probably looking to raise now? How has your journey been? Maybe not your current company, if you can't disclose anything from here, but anything from your past experiences, anything that you can share around how much you've raised, and how probably that didn't work out too well, or if it did, it worked out for you in that particular sector, and how you're looking at that differently today when you're building Nuclei.
So again, just my personal opinion. Okay,
Yeah.
I'm not generalizing here.
Yeah.
Uh, we have bootstrap nuclear.
Okay.
We were conscious about not raising initially. We could have raised, but we were conscious
Okay.
about not raising for a couple of reasons.
Yeah.
One, we wanted to reach a place where we had product market fit. Uh, I didn't want to, another investor to lose their money because of me. I did that in my second startup, where there was no product market fit. We raised just from a PPT or on the basis of an idea, and that was not great. That was not a great experience. The investor was fabulous.
Okay.
They let us make those mistakes, let us fail without even pointing any fingers at us at any point of time. But that guilt still remains. That we made a mistake. Why were we so foolish? I particularly, why was I so foolish? So this time around, that guilt was still playing on our minds that we shouldn't make that mistake by raising money and without having a product market fit. So we wanted to make sure that we had a product market fit and then raise. But while going through that journey, while having that product market fit, we also realized that we are getting enough money to just get by and remain a profitable company, and we may not necessarily need to raise. And eventually, that's what happened. That we had enough money to survive. We did not raise, and that just gives us that slight amount of freedom to build and constantly take decisions which are more long term in nature, rather than worrying about that where is the next funding round going to come from. So instead of worrying about and spending a lot of time on raising the next round of funding, we could just focus on building the team, building the product, and go in the right direction. So having that sustainability factor, or rather not having to worry about that sustainability factor, is a very, very big boon for us, which I cannot discount enough. I may not speak about it in front of the team or our clients as much, but having our clients who are helping us sustain or helping us remain a sustainable business, I just cannot thank them enough for that. So that is something which you realize over a period of time. I did not realize that 18 months back, but definitely over the last 6 or definitely over the last 3 months, I've realized it a lot. So
Great point.
that's something which we want to retain, that freedom, retain that independence to continuously build and think from a long-term perspective. Rather than if you raise funds, you have that pressure on your back to grow very, very fast, uh, and takes like few of the decisions become short-term in nature. So
Got it. Got it. Thanks for sharing that. I think, being real about it. Just one follow up there. Is it also because you guys are building in a B2B2C environment? Do you think that is why it is easier to be a sustainable and more profitable business when compared to a consumer facing product?
absolutely, absolutely. The reason we don't like the fact that we don't have to distribute our product or spend money to distribute our product,
Hmm.
again, is a very big advantage for us, and
Got
therefore
it.
we didn't have to raise money. If we had to build a B2C app, like there is no question, there is no doubt in my mind that we had to raise money. So that was again a conscious decision, which I also mentioned in the presentation, that
Yeah.
leveraging banks distribution was. Or rather, leveraging an existing distribution was one of the guiding principles while building. Why raise $10 million and give it to Google or Facebook when you can, just discount it a bit and make it from your client. Yeah.
Got it. Yeah. Uh, like we spoke about the risks earlier. Do you think other players building in a similar market to you, say in India, I think if you see people who trust banks, there are a handful, right? There aren't just too many of them that you can work with. Maybe, even 10 or 20, if you work with, you're good to go. But do you see other competitors coming in and then this market becoming pretty competitive? Because that is a huge risk. Like you mentioned, like you don't own the distribution lies with the bank you're working with. So do you see that as a risk or not really? There's enough for multiple players.
So there was a risk till we had 4 or 5 banks on our platform.
Okay.
So like initially we were very, very paranoid about getting to this 10 plus
Huh.
banks
Huh.
on our platform. And now we have 15 banks on our platform. There was a risk when we had 4 or 5
Okay.
of someone building a competing product and doing that. But right now, that's like specifically in Indian market, that's not a risk anymore,
Okay.
because like if you go to a 16th bank and
Yeah.
tell them that this is our product which we are building, first we have good 2 years over that product line. To the 16th banker, think from the banker's perspective. Uh, and to be honest, like today, if you look at the top 30, 40 banks,
Yeah.
they would have heard about us. Or we would
Okay.
have approached them, they would have heard about us. Definitely 10, 15 people in the bank would know about us, even if they are not our clients. So when they are thinking about taking that decision, would they go with a product which is already live with 15 banks? Or would they go with someone who's like, for them,
Yeah.
will be the first, they would be the first client of that particular product? It becomes a risk versus reward.
Very
Uh,
interesting.
Generally bankers are risk averse in that nature, and rightly so. That's the nature of their business. So I'm banking on the fact that they will be risk averse and go with us rather than our competing product. So
Got it.
That way, like we have built that moat around us.
Right.
Plus, over a period of time, we have also added a lot more, verticals in our platform. Uh,
Mm-hmm.
enables us to provide much more value add today. As I said, like
Mm-hmm.
we have 2 years over someone, and also build on top of that. So if you go to some of our clients today to integrate your product with the bank, they would, some of our clients, not everyone, but some of them would redirect you to us. And why don't you go to Nuclei, integrate with them, and then get onboarded? Instead of the banker onboarding you as a vendor first, going through all the legal process, it's a big threshold to cross for the banker, not for the client, for the banker to get all those internal processes in place. Instead, they could just ask you to integrate with our platform. For us, all those legalities, everything is done. We can just integrate a new product onto our platform, and the bank can go live.
Got it. Got it. Got it. Interesting. Um, Probably moving on to the last section that we have here. If we have more time, we'll pick up a couple of more questions. But this is regarding the last slide that you spoke about, where you think about building your team as a product.
Yeah.
So, digging deeper, would you be able to share how your team is structured? What are your thoughts around this, given your previous experience and the current one? And since you mentioned you have longer sales cycle, so how is your org structure currently looking like? And maybe over the next 2 years, how are you looking to expand that?
So obviously the org structure, the way our team is structured, will change as the company grows. Like
Mhm.
you have to continuously figure out what is the right structure
Yeah,
for the phase in which the company is.
yeah.
And I see
No, I
that
agree. I think the question there was, what is the ratio of, say, yours is probably a little more sales heavy. So product to tech to sales to marketing to founding team. So how does that ratio look like?
sales, like you don't need a lot of people right now.
Okay.
If you combine our sales plus success team, it is probably not more than 6 people
Okay.
uh, across the whole company, and we are around 83 people right now.
Okay.
Obviously, we are tech heavy. We have 52 odd people in tech, and then the rest is product design, customer experience, success, etc., analytics team, etc.
Hmm.
Like leaving that org structure or how
Yeah.
the teams are comprised aside, like when I said that for me the team is the core product, uh, that freedom also comes because we are bootstrapped. So we can take the risk of hiring a person who's the right attitude and
Hmm.
does not have the right skill. So we were like in the past we have taken risks on people who have not been working for the last 5 years, but have just prepared for say an IPS exam etc. But could not for whatever reason get through. But have the absolutely right attitude. We could take the risk on them and help them grow to a particular level in a particular skill set. And because they had the right attitude, they could acquire that skill set within a quick enough time, 2 months, 3 months, and become an asset for the company. So those are the people we want to take a punt on. We want to hire. We want to add to the team who would stick with us for the next 8, 10 years, or like who will essentially become a lifer for Nuclear, right? And that's how you end up get that freedom because we are bootstrapped, that independence. And that's where we are trying to build that core team which is very very committed to each other, okay, who have respect for each other, who disagree with each other on a lot of points but have a constructive disagreement. uh, at the same time they trust each other completely, and I'm not saying that we are there yet. It probably will take us a couple of more years to get 80% of the team right, but we are 50% there. We are 50% there. Like I can comfortably say that 50% of the team right now which is at Nuclei definitely is loyal, is committed to the cause, and can will definitely work with us in the long run. uh, and that came out true during the pandemic as well, during the last 3 4 months as well. Instead of laying off people, we decided it to take a salary cut, and that too not a fixed salary cut across the company but a voluntary salary cut. There are people who are earning high enough but have other dependencies, other requirements, have to send back money to parents, have medical expenses, etc., etc. So we let it be, or let it be a voluntary scheme where people just came back, said that this is the salary cut which I want to take, and we just accepted that. And that met our benchmarks, whatever we had to reach to make sure that our runway increases to more than 2 years. Uh, there are people who are say a year out of college and have taken 80% salary cut on their own. I did not ask them to do that on their own. There are people who said that, what, my wife is earning, I'll take 100% salary cut for the next 4 5 months. So it is literally, and it is like with a lot of gratitude, I say this, that when people take certain decisions of this sort, you really, really want to work with such people who are so committed in the long run. So automatically the reciprocity comes into the picture, right? So initially for the first couple of months, we thought that, we will just defer this payment, but then we realized that it's not the right thing to do. So we came up with, stock appreciation rights, similar to ESOPs, ESARs. Uh, and we gave them a deeply discounted at 50% rate, and double the amount of salary cut which they are taking, right? So we are giving out to all these, all the people. And right now we have committed a certain percentage of equity, which we will grow over a bit of time. My sense is that over the next 4 5 years, we would essentially keep aside around 20%, 25% of the equity just for the employee pool, right? In a VC funded company, generally that's not something which you're comfortable doing, because anyways the founders would have diluted a lot as well. So that kind of freedom, independence also comes if you have a bootstrapped company, and that's what we are building. So like even from a company's objective perspective, the first objective for the company is to build a team which agrees on certain virtues, common virtues, and enjoys working together. Now, one of the virtues is to continuously learn and continuously challenge each other to make sure that we are leading an interesting life. We are building our personality into an interesting personality. Uh, the second is that build a product which we are proud of, and then clients love. So first you have to build something which you are proud of, and then your clients love. And third is that if both the above things are done, automatically you will create long-term value for our people, for the team, as well as for clients. So these are the only three objectives for the company. We are not talking about who is the shareholder, who is the stakeholder, right? We are just talking about our clients, our team, and that's it. And if we get these three things right, everything else will solve itself. So the core focus is to get the team right, and you have to get the right person for the right role, and they have to graduate into that role, they have to grow into that role. So that kind of a belief, that kind of a trust in the team will develop over a period of time. As I said, we are not there yet, maybe another year and a half, 2 years, but we will get there. And once we get there, it's very difficult to uh, argue that we won't succeed. From the framework which we have about success, we won't succeed. The product, a particular product might not be successful, but the product which we have built, which is our team, will definitely become successful over a period of time.
Very interesting. Um, Thanks for sharing that. I think leading question, bunch of questions that all of us will have, but one that fits right in is around how do you hire? Like um, you mentioned freshers graduating and giving up 80 to 100% of the salary. So that requires another thing. That is not just something that's easy to hire for. So what are something that you suggest, or how do you find this talent? One second is during the interview process. How do you identify these skills upfront?
You can't have a direct question for identifying such skills. Like for me personally, and again it will vary from person to person within the company. But first thing is, we don't interview people, or I personally don't interview people. I know Karthik and others also, like my senior team members, they also don't identify or rather interview people. We have a long chat. So generally, my conversations with people we want to hire go on for 2 or 3 hours, and you can't fake across those 2 3 hours. You just cannot. Like at some point of time, you'll come back to your natural self. And the moment we realize that someone was faking even a particular aspect of their personality or particular skill set, it just gives away that this person is not right. So we love people who are honest about what they lack. We love people who talk about what they want to learn, rather than who come and say that this is what I've done in the past. Because it's fine what you have done in the past. We are not going to leverage that. We are going to leverage what you will essentially do in the future. So we love passionate people, and not necessarily passionate about product or that particular skill set. Someone could be very very passionate about football, or someone could be very very passionate about dogs for that matter. So that passion, if someone is so dedicated, so passionate about a particular cause, if they can become passionate about what we are building at Nuclei, and that particular thing could also be team camaraderie, right? It could be the team which they are building. Like those people will be an absolute fit for the company. So trust, honesty, and the ability or the willingness to continuously go to the next level, continuously learn becomes the core characteristic of someone who we would want to add to the team. And a lot of times we don't add a people with a particular role in picture in our mind. We just add that person into the team because we feel that over a period of time they'll figure out what they want to do and will just execute across the board. So there have been a few, not many, but I'm sure there have been 6 or 7 people who have joined the team without knowing what they will do, without us knowing what they will do for the company. But over a period of time, they have figured out what they are best at, what they are good at, and probably they are the star performers in the company.
Very interesting. Love that flexibility and the opportunity for people to discover what they like and then grow into that. Have there been cases on the other side? I'm going a little deeper into this because I think this is something that not a lot of people have spoken about. I think about banking products, tons of things out there. So this is something that is interesting. Wherein do you see cases where you'd have loved them and you've hired them, but 6 months later you realize, okay, things are not working out. How do you deal with those kind of situations?
Yeah, absolutely. Like, trust me, like, we have made more than enough mistakes in the past. Uh, a lot of mistakes which I personally regret. I was not courageous enough to make certain decisions. Definitely in 2018 and like first half of 2019.
Mhm.
Eventually got the courage to make those decisions, and somewhere around mid 2019 made those decisions, moved the team forward, moved the team culture, slightly changed, like actually like changed the culture of the company a lot over the last 9-10 months.
Would you
And
be open to sharing like a before and after, just so that we can understand, learn from that?
um, there was a lot of concentration of responsibility. It was
Hmm.
not distributed during the first year of the company,
Okay.
uh, which we realized was a very, very big mistake which we made. We
Hmm.
distributed that across the company uh, later part of 2019. We are
Okay.
now in process of distributing it even further, right to
Okay.
an individual level over the next 3 to 6 months.
Got
Uh,
it.
I think that essentially brings in a natural
Ownership.
responsibility, ownership
Yeah. Yeah.
uh, into a person, and
Yeah.
it also encourages them to do well personally as well as for the team. So that was a very, very big mistake which I made, and obviously like we started the company listing down all the mistakes which we have made in the past, but
Hmm.
I was also sure that we'll make new mistakes and learn.
Hmm.
So that was one of the new mistake which we made by not distributing responsibility. So that we did. Again, like it's a process. It can't solve. You can't solve that in 3 months. You'll have to refresh that over the next year or so. Uh, yeah, that was one of the biggest mistakes which we made. Did I answer your
Yeah.
question?
Yeah, I mean, pretty much. We were just understanding, like, for a lot of young folks, they're also figuring out. So, love the flexibility there. But once they get hired into an organization, sometimes you feel, actually, a lot of times we see that there is not that fit which you thought initially was great. You realize it 6 months down, a couple of months into the role, that hey, things aren't working out. So, how do you deal with that situation from the founder perspective or a manager perspective?
Have a very honest conversation. Like there are a couple of people who uh, I would love to work with them always, like throughout my life. It's just that they couldn't find the right fit in the company. So,
Hmm.
like the example which I always give is I'm a Liverpool fan. So the example which I always give is about Fernando Torres, right? Like he was a fabulous striker for Liverpool, but then he went to Chelsea,
Chelsea. Yeah.
which is a shit team, right? So you know that,
I'm a Chelsea fan.
but
Good for me.
which is okay. Let me
Yeah,
change
I
that.
agree.
It is not too bad a team, right? But
Yeah.
he just didn't fit into the team, and like Chelsea just ruined that person's career. So it's not about a particular person's abilities. It's also about the team which you work with. So people who have left us, or we had a mutual agreement that it's just not happening for us. It's not particularly a reflection on their capabilities or their abilities. It's essentially a reflection on their fitment within this particular team. They could be a
Right.
very, very good fit in some other team, and probably 95% of the cases have been because of that. The other 5% could be because of our mistakes, right? So
Right.
we just couldn't figure out, or we made certain mistakes with certain individuals, and that is the reason. So that's been the case always. There are also certain cases where they were a right fit a year before, but the
Mm.
company has grown and they have failed to grow along with that.
Yep.
So they were the right fit a year back, but right now they have not grown fast enough. So they got us here, but they will not get us there in the next couple of years or so.
Hmm.
So for those kind of people, you have to continuously coach and make sure that they are raising their bar, they are reaching their next benchmark. If they are not, they will have to move on. So
Hmm.
right person for the right role at all point of time. As the company grows, everyone has to mature. Everyone has to continuously grow and push each other to grow. If someone is lagging behind, either they pick up the pace or they will get left behind.
Got it. Got it. Got it. Yeah. Thanks for sharing. I think we have 2 minutes left, and there's a bunch of questions that are a little more technical. So I'll share them with you probably after the call. If you
Yeah.
could tweet those out for us, or if you could just do like a simple blog post covering that, we'd love to hear your stuff there.
Absolutely.
One closing question that we generally ask is something which is also my personal favorite. It is again general question, but if you knew then what you know now, so anything that you think over the last 10 years that you've learned from, that you would like to share with younger Ankur?
I would build a habit of reading books as early as possible, for
Okay.
sure, for sure. So, incidentally, this is one question we asked each other in our senior team meeting as well. That
Uh-huh.
what would you, and that was more on the personal side. So,
Yep.
actually, let me share both of them,
Yep.
not on the professional side or on the work side. So, definitely on the professional side, I would love to tell a 10-year-old Ankur to start reading books,
Mm-hmm.
which I did not had probably had to do more with the culture we had in a tier 2 town or the culture we had in our locality. But I started reading books only when I was, I think, 25 or something, like
Yep.
religiously. Like I
Yep.
would have read few books before that, but 25 or 26 or was when I
do,
started reading books
do you
really.
get time even with the entire founding, like as a founder you have so many things to do on strategy, on execution, that's always on your mind. Do you still get time off to do, say, reading?
That was an excuse which I used to give to myself
Okay.
till I was 26.
Okay.
Then I got scolded into the fact that if it is not your priority, you won't
Uh-huh.
find time. But if it becomes your priority, you will definitely find time for it.
Fair point.
I also, used to give an excuse to myself and fool myself that what, I can't read books. Like if I read for 5 minutes, my head starts hurting. Or like the laundry list of excuses which most of the people give themselves. I used to give them to me, and then I just built it up as a habit. So I started reading for 5 minutes a day. Like now, you can't give your excuse to yourself that you don't have 5 minutes of your time, right? You
Mm.
just like you should feel ashamed if you say to yourself that I don't have 5 minutes every day. So just that 5 minutes became 10, 15, 20. Now probably I read half an hour on an average every day. Obviously, my reading speed, absorption speed has also increased over the years. But yeah, that's what I do. On certain days, I keep time aside just to read and think. Like for me, right now it is Wednesday afternoon and Thursday afternoon. I don't keep any meetings for 3 hours. I just read and think about particular things. So yeah, that's what I do. I would tell that to a 10-year-old good. On the personal front, like I would definitely would tell a 10-year-old good to get dogs. Uh,
Oh,
yeah,
that's so cute.
that's something which I did only 4 years back. Uh,
Okay.
I would definitely would have changed that 20 years back. Yeah.
Wow. Wow. Okay. That's nice. How has that changed for you, like in the last 4 5 years?
I have become more like my empathy has grown like to a different level. I was not as empathetic earlier. I was not as kind earlier. So having a couple of dogs at home, having like my wife works with dog shelters, and
Okay.
she helps adopt like get street dogs adopted.
Mhm.
Like the kind of kindness or empathy which it brings into your life is on another level. And again, I trust me, like I never appreciated that. I love dogs, like
Mhm.
from when I was a kid, but I never appreciated the change it would bring in my personality. which I have now seen over the past 4 years, which has happened. So I would definitely would have brought that 20 years back.
Got it. Yeah, I like this. I think people who love dogs are the best people. So I think this was a great note to great note to end the day. And I think I love chatting with you, Ankur. Thanks for sharing all those insights, right from fintech products to your journey as a founder, and ended off with a bunch of interesting things from. So thanks so much for sharing that. And I hope all you guys enjoyed this conversation. If you did, please do give him a shout out. Ankur, what would be the best way to reach to you in case someone wants to write to you?
WhatsApp.
WhatsApp. Okay. So, guys, we'll probably pass on only for those who registered and those who attended. We'll probably pass on Ankur's number to you guys. So, I mean, that's very nice that you can reach out to him. And anything you could reach out to me as well. I'll ping you separately. Twitter is the best way. But Ankur, thank you so much once again. Any closing thoughts? Are you guys hiring? Anything that you want to give a shout out to? Any personal projects that you're working on? Anything interested? Feel free.
Sure. So again, like we are always hiring for the
Okay.
right person. Obviously, I have a soft spot towards people who come from tier two towns because I feel that most of them would work harder, and for ex-founders who would have uh, gone through the grind to come out stronger. So yeah, like we are always hiring. We are also building a new product platform for banks. We're also now growing outside of India, going into Middle East and Southeast Asian market. Yeah,
Nice.
that's what we are doing. We're trying to survive, right?
Yep, for sure. And all the best on that journey.
Thank you.
We'd love to hear part two of that maybe sometime soon
Absolutely,
as well.
absolutely. We
So
love to.
thanks once again. Yeah, thanks once again, Vankur, and thanks everyone for joining us. Have a great weekend ahead and stay safe.
Thank you. Take care.
Thank you.
Bye.
Cheers.